Welcome, traders, investors, punters, and dribblers to Traders Communities Podcast. Here we are on day 4, I believe this is, of the rally that was not meant to happen. Remember, the whole world was all bared up. It was all over for us. Well, here we are. We're going to go through those levels. Remember, today was the target. If we're replicating December's ramp up, where the market would come off, or at least top out. We did come off in the start, and then we rallied back to highs. And then after the market, as you can see, we saw a good selling off all those targets on the basis basically of that company formerly known as Facebook, whatever you want to call it. I think you know my views on it. Now it's known as Meta platform, in the great trying to rearrange what they're doing. Our boy Zuckerberg came out and said, well, we're not really sure. It's still a work in process in his conference call. The stock got smashed for about 20% on earnings, lower guidance. Basically, people are using TikTok. People have had enough of Facebook. It's overvalued, etc., etc. It got taken out the back of the woodshed. And there we are. That brought down the S&P a little bit, not too much. But it did smash the Nasdaq, as you can see. Those who were with us today, in the last 15 minutes, we bought all those puts on the SPOOs away from the money, and the Russell and Apple puts. Did not buy Facebook puts. I tend to not do them. Companies like that, the vol is through the roof. Even if you're right, it can be wrong. Obviously, 100.4, you would have been right. But anyway, Johnny Hindsight, I'm sure, did that one. But I took. So as far as the E-mini futures, they trade. Sorry, the puts, the SPY. Sorry, these were the SPY puts to be specific. We bought. What strike was that, John? I can't even remember now. But anyway, they doubled in the last 15 minutes. I took profit on them in case we're here tomorrow, and vol will come off, as you know. So, but on the other side, we took part on it. Oil today, we're going to talk about that. We had OPEC today, and we had EIA. We'll talk about natural gas. Obviously, it is very, very cold, and we're getting all that talk. It's going to happen again. The freeze down here in Texas, let's hope it doesn't. We don't want more burst pipes again. But anyway, that's affecting that. We have the EI report out there. What you're seeing live right now is what we're focusing on today during the trading. S&P mini futures, the S&P futures, the Nasdaq futures, the crude oil, the WTI futures, and the Henry Hub natural gas futures. We'll also talk about the Solana wormhole, upgrade you on that or update you. We'll talk about central banks. We have Brazil raise their rates again, getting kind of crazy there. All this information you will find on the Traders Community website. There's a lot of good articles. We'll talk about how crappy that AP number was today, the ADP number. Often that is very different to the official BLS number, but they're expecting a jump of 200,000 new jobs. They got a decrease of 300, and that was the first decrease from I think it was November 2020, something like that. And obviously reasons for that, we'll talk about that as well. So let's start off with what happened on the SPOOs. So we're using the TradingView charts, which we use on and off exclusively in today's podcast. So bear with me if I have a bit of a struggle finding the pages. So here we are on the S&P. So let's go right back. So I want to start off with this long chart. So this is looking at the futures, not the SPX. So we like to look at both of them. And my checkmate made a point today that what had happened today on that sell we did right at the close, or just before the close, where we bought SPY puts and sold the SPUs futures, the cash actually got up to the 8/8 on a 5-minute that we trade off. The futures didn't. So, and generally we trade off the cash. So getting used to this new charting system, that actually didn't give it. We did have the short on other levels, such as Ichimoku, etc. Anyway, let's have a quick look at this. So we got Meta Johnny here and the great Madavi joining us. So if you look at this chart, and I know this is real long. This is from March of last year, right? So that's your whole trend. What I wanted to point out, and this is, so we had the 3-day, or the 2-day rule, whatever, from the end of year we were talking about, the window dressing. And apologise for we didn't do the podcast last night. I was at a track meeting, so that had priority, obviously. And good to see that we won that. So anyway, we look at this. You can see we came right back to the bottom of the cloud. And it was almost, well, I can tell you where it went to. It went to basically nearly 45.90, 45.87. Then after the close, it dropped. Like we're trading at 45.40 now live, so it's nearly 50 handles. But look what it did. It's not magic, or is it magic? We tested this breakdown, what we talked about, and we went right to the cloud and we dropped 50. That's on your daily. As far as Murray goes, it's a daily one. We're nowhere near anything with a heavy thing. So then you obviously go to your other levels. If we go to our daily, our overall chart, all your different charts, you will see this is where that is on the cash. So as I pointed out, we were talking before, the cash and the futures are moving differently. That's not unusual. And you can get your divergence and positive divergence. Part of that would be that we were bullish all the way up, but a lot of the market makers are unloading, and it just, I'm no different really. We're taking position or getting short. I know Madavi was doing the same thing, and that's reflected in those charts, right? So you can see on daily we didn't quite get there, right? So this is just a shorter version, and you can see what we've all tested here on that. Now, if you go to your weekly, look at the extent of that spike, guys. That's a massive run, right? So we may just come down and test this. 45.10 was the Cajun. If we break it, this becomes a big spit. And so remember your bull case is that this was an ABC correction of this, and we're going substantially higher. In that bullish scenario, we hold this and we continue up. The bearish scenario, the two bear cases are that this was just your first wave down, like wave 1. This is wave 2, and we're going a lot lower, and we get down to test this cloud. And so this is still in wave 1. Your secondary bearish case, where this would be A, this would be B, and this would be C, of a larger correction of all this. So eventually that becomes bullish as well. So that's pretty straightforward. Nothing's changed there. You can see on the... why do I have 5 minutes here? As I said... Oh, yeah, sorry. This is what I wanted to show you. So we're comparing cash versus futures here, and you can see the slightly different patterns, right? So just keep that in mind if you're a futures and cash trader. That's what's going on. Okay, pretty clear. So there are our levels. On the 5 minute, this is your support, 4/8, and then we will bring... Let me turn this into an hourly chart on the cash for you. 1 hour. So you can see where we are, right? So support is down here on the cloud, 45.24. This is hourly. That's also the breakup level. That's roughly what we saw in that Cajun that I just went through. And then look at our Murray grid. We have all this below. So just to be sure where we come from. We came all the way down here from just under -2.8. Or between -1 and 2.8. So if we count this out, we've had a 4, just over 4 Murray bounce on the grid, and we've got a Madam Adams theory, a replica fractal. So we spat under -8, we spat over 2.8. So you've got all that in play. That's why we took the put option. And why we did that? Because you don't know what these earnings are. We had a pretty negative view of Facebook, given Google obviously took business from them. We didn't expect it to be that shocking, but that made that worth a good value put play. So let's bring Madavi on and talk about the good old NASDAQ. Let me see, how do I get this bigger here? Oh, there we go. But so, yeah, if you want to talk us through this NASDAQ, this is the 5-minute through the day and obviously after Facebook. So do you want to talk us through the day or just Facebook?
Yeah. Let me get that up on. Today, like all week long, we've been in this pattern of basically some big companies came out, had some earnings, and the market basically recovered to the point is where we started to sell off a couple of weeks ago. So we're right there, it looks like we're close to it or right by it before we started selling off after the Facebook. But ever since the sell-off started, these up moves have not been constant. There've been a lot of back and forths, very choppy, making it look weak, then getting strong, and kind of blowing through the shorts to kind of get everything going. So they would look like it's going to get weak. People are short. Then they would bounce it up with a huge amount of buying, and it would just force the market up. Well, today was kind of the opposite. Kind of we stuck around, we hung around, and we didn't do much. At the end, we came down a little bit, but never taken off like we have the last couple of days. So I was sensing there was going to be something going to happen today.
Right.
Was it going to be Facebook or what was it going to be? And it was Facebook that ended up eating it. So now I think we're going to go back to where we started. We started this whole race at, and with Facebook selling off, a lot of these earnings out. You got Amazon tomorrow, and I think a lot more of these companies are going to disappoint than to do a Google and Apple.
Yeah, Amazon's tomorrow, right? Yeah. Well, the rumor on Amazon is, and it's just based on the fact that bloody Google did the split, that they're going to do a split. That's the rumor out. But I think it's just based on the fact that
Google's definitely doing a 20-for-1 split.
No, Amazon. They're expecting Amazon to do the same. That's the rumor. But it's probably just put out there to get it up there, right? So SPOOs are traveling lower as we talk here. Let's have a look at this. Go out to daily to show what you're talking about on. So this is the other really bearish thing. So Madavi trades this on futures. I kind of prefer, and he led me to it, is the double short, what do you call it? ETF on it. But the reason we put that on today, right, it got up to and spat this Cajun, which is, see this level? That's what Madavi's talking about. See this breakdown level here? Which is, this is the NQ futures, not the index. But you see this line here, 15,288, 15,231. That was our high. So it retested all that, and plus it got over the Cajun. And once it came under it, obviously it's money for jam, but that was, so you do like futures or ETF or puts, however you want to do it. Just know your risk is above here, right? And so obviously we got fed by that little Facebook fiasco. It's kind of scrolling around. It's got off kilter in the metaverse, that little Facebook, hasn't it? So anyway, on this, if this continues, our target is it's 44,473. On a couple of levels, this is a healthy target. This is a daily chart, so keep that in mind. And this is a violent, very volatile future. So do not touch this if you don't have the means to do it, right? That'd be a fair comment. It moves pretty fast. So there's other ways to do it. Optionality or whatever. Vol got really cheap today, so options were cheap. Anyway, this level is a retest of this low here from October. It's also the Tenkan, and that's where this all broke up. So you got some reasonable targets here. But Amazon is a big part of the NASDAQ, and it's a big part of the SPOOs. So keep that in mind, right? So that could obviously accelerate this lower or move it back up yesterday. Facebook, one would imagine, is going to get more downgrades overnight, I would think, right? Be a brave man that upgrades that. We also have Twitter and Snap reporting. Is that tomorrow? I remember you mentioning it. But they got trounced in sympathy with Facebook, Metaverse, whatever you want to call it. Today, Spotify was another one that come off today. That was probably hurt a bit by this. It did bounce off the lows near the end there. And so let's talk about the Russell, eh? So Russell's
what gave it away. It was weak all day.
Yeah, and this is the ETF.
On a day like today, there was more stocks down than up. So these big, huge companies were holding up everything. The indexes, anyways. Yeah,
definitely. I think what I was seeing was, and it's exactly that. What do you call it? Google was kind of hiding everything, right?
Yeah, it was hiding in the shadows. I think today, Amazon was, there was more stocks down up today, and I think Apple was up for a while. Microsoft was up.
Apple got up, but it didn't get up much. I mean, we traded that one, but it didn't really get up much.
Companies were up, and that's what basically kept the SPOOs and NQs up until we spat it.
Yeah, and so of note, this isn't just Facebook taking it like a champion. Yesterday, PayPal was down. They had their earnings. They disappointed. That was down 25%. So there's a couple of things that I got out of the PayPal conference call. It was two things. One, are other people using, different forms of payment? But the main one was I think it was the CFO. It was either CFO or the CEO. Anyway, one of them was saying how they are being affected, small businesses, from two things. One, people not having the money because of inflation to spend. Yeah, and the eBay factor. And the second one is that they're being affected on the supply thing too, because a lot of people use them on eBay or Etsy and people like that for their small businesses. So you got two negative effects of the inflation and the real factor. And you saw... what was the other thing? So the jobs report today from ADP was a shocker. That came out. There's a report on it on Trades Community. Let me drag that over into the screen here. But it was the first time since December of 2020. So that's all the pump priming's gone in and everything's going up, to get the economy going, that we've actually had a negative jobs. In other words, a lower gain in jobs, at least with ADP. And the other thing was it was the biggest fall since April 2020. So that's right in that. That's how big that was. So the business sentiment was hurt by the Omicron coronavirus variant. People not being able to go to work, businesses shut down, all this stuff with the vaccine mandate, rising interest rates, and concerned about the capability of the US administration's handling of the economy. It's just becoming laughable, really, what's going on with the managing of the energy situation, the blaming of it's everyone else's fault, the whole wag the dog, which is, we have a bit of a theory with some of us in the community, the whole wag the dog of Ukraine. That's been going on for a long time, that whole thing. But you've got to blame someone with shocking energy policies, so let's blame Russia. Let's see how all that theory plays out. But those in the energy world are pretty observant of what's going on there. And and as I said, I have a lot of relatives in that region, not Ukraine or Russia, but not far from there, Estonia, Finland, places like that. And a lot of them are like, what the heck's going on? Also have contacts in the Russian part of Ukraine and the Ukrainian part of Ukraine. And it's a different story is basically what I can say, is what we're getting here and what we're being pushed on us. And it's not just the US that are wagging it a little bit. Old Boris over there in England, he's got a few distractions, hasn't he, mate?
Oh, yeah.
Yeah. So, all these things go on, and most people can't see the forest for the trees. They just want to blame someone, be whatever. Do you think, they can blame their stock investments, they can blame their things, they can vote who they vote for, whoever they want. They're probably going to blame Tom Brady at this point. I'm surprised he hasn't copped a mention. But anyway, look, in reality, this is what's happening, right? So this is private companies. This is what this report is. So just look at this graph, right? Boom, 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 bang. There is a toll when your government, coupled with all the other things, creates negative sentiment, right? And this is before the really bad weather's kicked in, by the way. So, it's partially. So if we look at this, look where all the jobs were lost. So the concern has been that people don't want to work for lower wages, and so they shouldn't, or they want a permanent job. So look where that all fell, leisure and hospitality. The only thing up in all of the US out of these sectors, and it was barely up, 4,000 jobs, was natural resources and mining. That's it. Look at that, mate. Just a shocker. Now, if we looked at which company size are hiring, the smaller companies obviously getting killed by what's going on with these policies. The government obviously. I think it might have been you, Madhav. You mentioned that all these big box stores, they don't have the same problems or harassment over things like the vaccine mandate stuff and stuff like that. And they're just sheerly, obviously a lot of them were already broken from the lockdowns and stuff. So you're seeing that in these numbers. But you're also seeing significantly a lot of jobs in the big situation too. It's going to be interesting tomorrow listening to Amazon because they're one of the biggest employers, right? And they're also affected. Yeah, they're huge, right? And they're also affected by.
Their employees get their vaccine or whatever. I don't think they couldn't get enough people hired if they did that.
Right, and I didn't read it all, but there is the union situation there. The unions.
Union got rejected.
But aren't they going again? Yeah, so you got all this sort of stuff going on. So it will be interesting if they get affected after seeing that Facebook earnings,
Yeah.
And PayPal earnings. Two things that could affect that. Now, the other thing while we're on this side, let's talk quickly about what happened in Brazil. Where is that? So Brazil's earnings. So they raised their rates today, and it's the 8th straight consecutive interest rate hike. And they're not mucking around. 150 basis points. It's now up to 10.75%. So they're attacking their inflation. What's interesting when you go through here, their inflation is less than what it is here, right? So where's inflation? So their expectations are 5.4% and 3.5%, right, for the following year. That's lower than what it is here. Now, I know it's a emerging nation and all that, doesn't have things, but it gives you an idea. I'm not saying this is going to happen in the US. I think we're probably, if we're getting that drop-off in the economy already, with
US
those
can't
jobs...
pay 2%.
Well, they can't. Look, firstly, well, that's from paying for it. But if you've got a drop-off in jobs like that, if that's sustainable, remember the mandate is rates and jobs, right? And Powell and Brainard have made it very, very clear, and this is why we were kind of playing that bounce last week, that they cannot control the supply, which they can't. Now, all these half-wits that are analysts or whatever sitting up in New York and all bloody pussy-toed, however you want to describe it, the entitled... They can go on all they want. Have a look at Main Street. Look at the damage, right, that's going on. And they're mindful of that. And the administration, unfortunately, is just continuing to push an agenda. And this is what amazed me of the American politics, is that the partisanship either doesn't want to admit it or can't see it. I really can't work it out. But anyway... So that all said, just look at those job numbers. So on Friday, we get our jobs numbers. Now, if you're a chronic bull, that means they can't lower rates. Well, it also means you've already got bloody inflation. And if these companies can't make money, etc., and they're not going to employ people, what does that do, right? And so that's kind of what's going on. The other thing that happened today was OPEC came out. It was the fastest meeting ever, I understand. It was like 14 or 16 minutes. Take your pick. They're exactly on schedule. They're raising their rates, raising their production by 100,000. Russia's basically that. And why wouldn't they, right? 88 bucks. Huh?
400.
Yeah, but it was by... they're going to raise it by 100,000 bet, right?
400,000.
Yeah. But they're already, that was what they were, so 400,000 in total, right? Okay. But 100,000 for Russia. So the reason I mention Russia is, and just the calamity that is American foreign policy under and the wag the dog thing. If you remember, President Biden went hat in hand to OPEC Plus, which OPEC Plus is basically OPEC plus Russia, right? So to increase production, and his energy secretary just laughed when, well, actually you got Texas and you got that.
He's got to now get the deal done.
Right. So, I could be wrong, on my theory, but I think I'm pretty right, the wag the dog thing and what's going on actually over there. And then, so, here's the other thing. So, if they're not going to allow the US, i.e. Texas, etc., and so you remember, this bloke, this president has managed to pee off all American oil and gas companies when... he accused them, if you remember, Madavi, a couple of months ago, of gaming the system and they're doing all this to make money. Managed to pee off all the Canadians the moment he came in, we're not doing that pipeline. And obviously hasn't won any friends over there in Russia. So that's your main oil people, right? Now, let's look at the main gas people. Well, we know what he said about the Canadians and the Americans. Right, we know what he said about the Australians when Australia wouldn't take party to that whole thing at the climate conference, and the people that actually matter, that are getting freezing cold in the poorer countries, they're no doubt grateful to that. The entitled, as we said, they obviously have no thought of those people. So just think of that. And who's the other one? Qatar, right? So Qatar, Australia's number one, Qatar's number two, that just flipped, US number three. He's treated all, this is the US president we're talking about, and the administration. The next people in that, Russia, We know that party. Then the next one in this thing is Iran. Iran, we all know what's going on there with the Iran nuclear deal, the negotiations. Iran's is full on that with China. China's begging and trying to backdoor stuff through Australia. So all that's going on. So then it begs the question, okay, what are they going to do? What are they going to do? Are they going to say to Iran, okay, you can come back in or whatever, or do some partial deal? Iran made a comment today, the Iran oil minister, that, look, if America wants to get their prices down, or oil prices down, there's one thing they can do, which is what, Madavi?
Yeah, get rid of those fake sanctions they put on.
Right, so you've got that situation. So that's where we are in energy. And I'll give you the little tip. We aren't getting any warmer here in the States. I mean, in Houston, it's going to be 30 degrees, Fahrenheit on Friday. So it gives you an idea how cold it is above Houston, above this part of America, how cold it is in the eastern states and Canada. And we all know how cold it is in Europe. So it's an interesting game. So that's all the fact news. And if you want to go through today's EIA report, it's all there for you. So here's what we're seeing. Before we finish up on oil and gas, we should look at the prices, I guess, right, mate? We went through those charts. Where were they? That's the Russell. So there we go. Here's crude. So here's what's interesting. And so my buddy Chad made a comment this morning that, it used to be a big deal with OPEC because it was 2 or 3 times a year. It mattered. Now it's like every month, and it's kind of become like these Fed meetings. So it was a kind of a non-event. Now, this isn't a good thing if I'm a big bear, because it meant you didn't get a lot of profit taking. We're still 87.60 after 88, right? And look where that is. So we're still up here. Remember, this 70 cents, Madavi, is because spoos are selling off, right? And then have a look at this natural gas. This was up massive today. This is the Nattyverse. So we have the Nattyverse, we have the Mayverse, and we have Johnny's Metaverse. But this is up, how much did I say this settled up today? I can't remember. I'll tell you what it was for. Yeah, so it settled up 16% today, 15.8%. That's a bloody big jump in energy costs, right? So just think about what this is costing the average man and woman and child. And as we look at this, it gives you an idea where we're going. And we have all these levels. They don't change. They're in the weekly report. So just keep an eye on that, and we can come back to it. What I want you to notice live, guys, is NASDAQ futures are still getting wrecked. S&P just broke under that low. And as we were talking, Madavi made a point about the Russell. Well, that's down too. Now under 2,000, right? Look at this. That's the IWM. So this isn't good. If this flows into selling into Asia, and then Europe was pretty well all up today, I think. Let's have a quick look at Euro did. So Europe closed before that big rally, so they missed it. And what did Europe do? So here's what happened in Europe. The Germans finished unchanged after being up 3/4. The England finished up 0.8% up, being up 1. France, so basically they all gave up half of that up. Now keep in mind, this was before the US went out near those highs. But did that move to the highs? Didn't go out the highs. Spain was unchanged. Remember, we have most of the Lunar New Year going on, so China's not back until Friday. And I'm not sure exactly when Hong Kong and Singapore come back. South Korea is meant to come back tonight. Australia's been strong, obviously, with commodities and stuff, but it will be hurt, the tech sector, obviously, by Facebook. What's that team and all that Afterpay stuff as well. As far as bonds today, this will change. What we saw in the bond market, and this is all on the website, you can go through it. So on the bond market, we saw safety demand coming through with the geopolitical risk, and that shocking ADP number. The 2-year, which, remember what the 2-year is, that's what you look at for your Fed funds rate. So that fell 1 basis point down to 1.15. The 10-year, which is the benchmark for most lending, and when you compare different countries' bonds, that fell 2 basis points down to 1.77%. You can see there on the curve what's going on. And as far as earnings today, pre-market, we talked about what really hid what was going on, which was, what do you call it? Google. Sorry, I'm watching the markets while we're doing this. So we had Google, where you are. So Google Alphabet was up $300 this morning, up 10%. And these changed at the close. PayPal was already down 17%. And AMD, that was the other big one I was talking about. That was up $30 this morning, up $14. Starbucks was down, and GM was up. That was your earnings. The other thing we want to talk about is inflation over in Europe. This is ECB, has its meeting coming up. So does Bank of England, right? And they're looking at this. These are record high inflations coming out, right? Or near records. The inflation year on year in the Eurozone, they're expecting a 4.4%, still a big number. They came out at 5.1%. So that's another big jump. Over in Italy, their January CPI was 1.6% year on year. And, month on month. Year on year is 4.8%. So this bloody inflation is everywhere, right? And the shadow board of the Bank of England is looking for a 25, they're recommending at least, a 25 basis point hike over there in England. And so that's pretty well all out. The other thing, and we'll bring, is Johnny, I'm not sure if Johnny's available right now. Is Johnny out of the Metaverse? Because what we're going to talk about is some big stuff going on in crypto land, right? So we all know that Bitcoin's pretty well. Actually, you know what? Let me bring up this chart. This is a live of what's going on in Facebook. This is a 1 minute chart, just so you can see. So that's trading at 249 right now. Bitcoin is trading down at 36,838. The S&P cash is trading down at 1470. Not S&P. Nasdaq 14786. So that's the cash, not the future. The future's up here at 14770. Okay. So while we're talking about that, so over in Bitcoin land or crypto land, so you can see Bitcoin's struggling to come back. Remember, it had that big bounce. It couldn't quite get back up. But the big thing going on in Bitcoin is the Solana. Where do I have that? So I can explain it to you. But they have it anyway. There's a wormhole situation. Then I'm going to take this article from CoinDesk here. So this came out, and Solana is obviously one of the big ones. I keep calling it Solana because of it's got the most advanced, and it's going to, the Ethereum. We've talked about the cost. Johnny's talked about that mega times. Anyway, so they're trying to negotiate what's happening. It's at 326 million, this exploit right now, money gone. So they're negotiating with that for what they call the wormhole blockchain bridge. That got an exploit in. there. So that's going on at the same situation with the general selling off in the S&P and, of course, NASDAQ and Facebook. So these are things that are all overhanging. It was for 800,000 Ethereum and another one for 40,000 Ethereum. And so they're negotiating the hacker. The problem is there could be a ton of them. So that's what's going on there. We just want to touch on. So there we have it. Anything else we want to address, lads, or talk about? I think we covered everything. There's a lot to unpack today because we didn't do this. Apple right now is trading at 173.60 in the aftermarket, lads. So those puts are looking pretty good. This is a 1 hour chart. You can see the 1 hour cloud. All right, so let's have a look at our daily to give you some more regional targets.
Huh? It's got 164, so it's got a 164.
So here's what we have here is this thing has bounced $20 off its low, right? This is a daily chart, then we'll go back to it. So this is a daily close. We trade to 175.84. We're now $2 down. We just saw in that other chart. So our first level support is going to be here, 171.60, which is all this noise and the cloud. This is also, we had earnings. Remember, that's what this jump was. I think it was 162. Then it got to 167, right around here. Then the next day it opened up here and also after conference call. So a healthy correction would be at least 38% of this. And you can see your levels. If we look at Murray Maths, this whole thing is not even one full on a daily, right? So if we go to an hourly again, so here's what I want to show you. So this is why this is critical. On a Murray level, look at that. It was just such a brilliant buy down here that we were very... So it's why you have a system and charts. So you needed something to buy a minus 2/8. It actually went under that. It got down to 154.70. And then but you had the Chicow. Then you had all this price action. This is your earnings. Right? So keep all that in mind. So we're testing this here. And so what I want you to notice is we got a plus 4/8, right? From minus 2/8. So that's 6/8. Not a full 8/8 move, but you can see what's going on. We ran into this resistance here. Remember, options play a massive part of this. There's a speculation bit, obviously. You're seeing the gamma. But it's also, remember how many people own Apple. You're talking central banks, massive hedge funds, the people's 401ks. So our optionality is a very big thing. Selling vol to finance it. We know a lot of that would have been done. A lot of this would have been chasing delta. People that were long were selling as it collapsed because of high vol and all that sort of situation. So there's your levels. Go through them. Keep it very cut and dried. This is a perfect ABC. Remember, we're looking for today to replicate December. It's working out like that so far. Not as dramatic, but you know where you're wrong in that situation. Just count 1, 2, 3 on here, right? And that is in everything. So here's your Russell, right? Daily, big red spug. Weekly, really nothing there. And then you've got this, what's going on. So your bull would be that we don't go lower. It survives Facebook. You got 1, all this is a 2, and we go back up here. Your bear is pretty cut and dried, right? You can see it more here. You can see, unfortunately, it didn't do the head and shoulders, which a lot of people were hoping. But I have noticed with my time looking at Russell, it kind of always has this weak thing. If you remember the negative divergence that was up there at the top after the all-time highs up there in December, this thing could never break. If you go back and look at our daily and weekly Cajuns, right? So, again, here's your levels. You can see there's that same level that we saw on Apple. There's a lot of the same pattern across. And so think of the cloud as a replica where people are. That's what support is in that basis, because it's more time and price, right? That's where we use it with your Murray. That's about it, really. If there's anything else. Yeah, and good point there. Meta World is off to a rough start. So thank you for joining us. Remember, share and as many likes as we can. Tell your friends to like it. Go through and like everything else. The more we can get out there and put up there, the more spread we have, the more we can kind of spread in doing this. I hope you enjoy it. Basically, the gamut is to express more what goes on with the larger side of trading. That's what people seem to want to hear from us. And the whole macro world, how we watch the different markets, the currencies, different commodities. Obviously, energy is a big part of what we do. And so we're a little bit jump started here, not exactly familiar with how to flip through all this. It's easy. You can see oil and gas right at these critical levels. And the S&P and futures are all basically, it's whether they hold up from Facebook. We have Amazon tomorrow is your big one. So that gives us out the fangs. We've had Netflix, Apple, Google. Who's the other one? Trying to think of. It's Nvidia. I don't think it's reported yet, but it's not in that. But it's in that related area. And of course, Facebook today. Is it still FANG, or they got to put an M in there somewhere? So anyway, thanks. Like us, subscribe to us, share us, let us know, shoot us a note if you've got any questions. What do you want to do? If you are in anywhere, really, in the Northern Hemisphere, stay warm. Watch out, be careful with everything going on. We just needed another thing, didn't we, punters? So all the punters and dribblers out there, send her along your questions about things. Remember, Nova Wave, we use Ichimoku and Murray, Elliott in that basis. So it's good to have at least an understanding, or at least try to understand that sort of stuff. We want you to be able to think for yourself more in a strategy, just rather instant. Have a view, and then these moves won't surprise you. You'll be able to benefit from it. So thank you, everyone, for joining us. We should be on here tomorrow. Bye now.
Always be killing it.
Always be killing it. See you at the roundabout. So, see you guys.